Hello friends, I am Ravi Somani. I am a chartered accountant. As you all know that Union Budget was presented for financial year 22-23 on 1st of February 2022, and there have been some major changes as far as GST is concerned. Although the volume of changes in GST is not much, but whatever has been changed has got a big impact. So in this video, or the purpose of making this video is to discuss or dive into the details of the changes that has taken place in the context of input tax credit. So we would not be discussing the entire changes of the budget that has happened in for the GST purpose, but we would dive in detail on the changes that has happened in the context of input tax credit. So we would have this video in various parts where firstly we will understand the key change as far as input tax credit is concerned. We will understand what are the unaddressed issues in those changes that have been made. We will also understand what are the legal validity of these changes that have been made. We will also look at finally what is the action that the businesses would have to take as far as these changes are concerned. So without taking any further time, let me first explain you the important change that has taken place in the context of input tax credit. Now, as far as input tax credit is concerned, uh, in section 16 subsection 2 of the CGST Act, SGST Act, CGST Act as well as SGST Act, subclause BA has been added, wherein one more condition has been put up for taking input tax credit to be entitled to the input tax credit. So somehow this is becoming like a practice where government feels that putting restrictions on input tax credit is an easy way of revenue augmentation. Somewhere I don't agree with this because it disturbs the entire concept of value added taxation. But then this condition is going to have a large scale impact. Now let us look at what is this condition and what is the impact. Now section 16 subsection 2 subclause BA that is there in front of me. Now it says the subclause BA that has been added. It says that the details of input tax credit in respect of the said supply communicated to such registered person under section 38 has not been restricted, which means the details of the input tax credit that is communicated to the recipient is not restricted, and the mechanism of communication is going to be given under section 38. So we need to read both section 16 subsection 2 subclause BA and section 38 in order to understand this amendment. Now what this amendment means in a very simple terms is that till now we were thinking that if the credit is available in GSTR 2B, then the input tax credit is eligible to a taxpayer. It means first of all, this whether this is GSTR 2A 2B, whether that itself is legal is a different question. I'm not getting into that, but assume for the time being that GSTR 2B is legal and the input tax credit is available as per GSTR 2B. We were assuming that once the credit is reflected in GSTR 2B, it is eligible, no problem, you can take that input tax credit. But now by this amendment, what government says is that even after the input tax credit is available in GSTR 2B, it would not be eligible, it would not be entitled if it is restricted as per section 38, and the details of the restricted credits would be given or communicated as per section 38, which means section 38 talks about two types of credits. There is one type of credit which is freely available, no restriction, you can take that input tax credit, and there is second type of credit which will be restricted credit, which even if it is reflected in GSTR 2B, the assessee cannot take the input tax credit because it is a restricted input tax credit. Now, when the credit becomes restricted, it is very important to understand that when this credit is going to become restricted as per section 38. It says if the details of supplies furnished by supplier is not furnished by supplier within the specified period of taking registration. If a supplier, that is if our supplier is not going to furnish the details of supply that he has made to us within a particular time of his taking registration, it means that the supplier would have to timely update the details after taking registration for a recipient to have this credit eligible. Now, this is something I fail to understand as to why this restriction has to be there, as to why a recipient's credit has to be restricted if the supplier gives a details of his supply after certain time of taking registration. We need to wait for the rules as to why this restriction is going to be there. Serial number 2 is that if the supplier defaults the payment of tax for a certain period of time, it means that if our supplier is defaulting the payment of tax and that default continues for a certain period of time, then the input tax credit is going to be restricted for the recipient. This is condition number 2. Condition number 3 is that details of GST payable by the supplier as per GSTR 1 is not matching with the details of GST payable as per GSTR 3B, and the difference is beyond a certain limit. It means that if there is a difference between GSTR 1 and GSTR 3B of the supplier, and if the details if the quantum of difference is beyond a certain limit, that limit is going to be prescribed by way of rules, then the recipient's credit would be restricted. Point number 4, ITC availed by the supplier is not proper or is not availed as per this particular condition. Now, this is somewhere I have a very big problem as to how the ITC availed by the supplier or incorrect or ineligible ITC availed by the supplier can restrict the credit of the recipient. But this is how the condition is put, that if supplier claims incorrect ITC, then the transaction between a supplier and recipient, this transaction will become restricted based on the transaction of supplier with his supplier. Now, this is absolutely vague. I really don't know how government is planning to implement this amendment, because it is not possible. How can a transaction between a supplier and his supplier and an issue of ITC in that transaction is going to block a credit between me and my supplier? So this is very unfortunate condition that ITC between a supplier and recipient is being blocked for supplier's transaction with his supplier. Now, similarly, condition number 5 is also very strange, that if supplier does not follow the requirement of Rule 86B, that is, if supplier does not make the mandatory payment of GST in cash, that 1% payment of GST is mandatorily required to be paid in cash as per Rule 86B. If the supplier does not make such payment, then recipient's credit is restricted. And the last condition is the most draconian. It says such other class of persons as may be prescribed. It means apart from these 5 conditions, or apart from these 5 restrictions, department has given full powers to the executive authority to make or any other restrictions as may be prescribed, which means in future if the restrictions are to be put on input tax credit claiming, then it need not go through GST Council, and a commissioner of CBIC can directly issue a notification by way of rules and put restrictions on the input tax credit. Now, this is going to have a large scale impact. While these amendments are brought, few important aspects have been missed out. So first and foremost thing I would like to bring out that now the concept of two-way matching is officially dead after this budget. So the concept of GSTR2 and GSTR3 is now dead. They are not going to see the light of the day. So effectively, government has now decided that they want to go for only one-way matching. So all the onus is now on the recipient and supplier is given a free hand, and government is going to put all the restrictions, and entire squeezing is now going to happen at the recipient's end. So the opportunity for a supplier to upload details or to rectify details, or sorry, the opportunity for the recipient to upload details or rectify details is no more available. So now few unaddressed issues as far as these changes are concerned is first point is whether these amendments are transactional based or supplier based. This is not clarified in the budget. I'll give you an example. Let us say if there is a default by a particular supplier on a particular invoice, although on 80% of the invoices he has made the payment of tax, on few invoices is defaulted because he don't have funds, he doesn't have money, there's no wrong intention. Now if you are going to block that supplier or red flag this supplier, then all the transactions of this supplier is going to be red flagged for the recipients, which means currently there is no mechanism to dynamically put these details at a transaction level or to bring this restriction to the recipient at a transaction level. So eventually what is going to happen is that government is going to identify certain supplier and they are going to red flag the supplier. Once a supplier is red flagged, then all the supplies made by that supplier will become restricted to the recipient, even though 80% of those supplies are genuine supplies. Even the balance 20% are genuine supplies, but he could not make the payment of tax due to various reasons. This is going to cause a big hardship because uh, even the genuine transactions are going to suffer. For example, serial number 4 and 5 condition that we have seen in the previous part, we saw that a claim of supplier with his supplier is causing restriction to a transaction between supplier and the customer. Now this cannot be made transaction level, it has to be at a supplier level. Now if this restriction is going to be co the supplier, then it is going to create a kiosk because all the recipients of the supplier are going to be affected, all the transactions of the recipient of supplier are going to be affected, and not just that, even the impact is going to be retrospectively affected. For example, let us say if the supplier has defaulted the returns for the month of September, October and November, now in December you are red flagging this supplier. Obviously he has not paid the taxes for September, October and November, but for September, October and November, the recipient has rightly taken the input tax credit which was available in his GSTR 2B. But now if the red flagging is going to happen for the past transactions as well, then every time the recipient would have to reverse the input tax credit with interest and re-avail it at a later point of time. Now this is going to create a problem which is still not clarified as far as this budget is concerned, whether this is going to be transaction based or a supplier based. Next very important aspect which is not clarified is that what is the mechanism to remove the red flag? Okay, you want to red flag a supplier, which is understandable, and all the details about red flagging a supplier is what you have given in the budget, that if these conditions are not satisfied, we'll restrict the credit. But how the supplier can get his red flag removed? What is the procedure? What is the mechanism? The law is silent, the budget amendments are silent, that doesn't talk about it. So eventually a assessee who is red flagged would have to run from pillar to post to get the red flag removed. There are going to be series of writ petitions that would be filed. Nobody is going to wait for the adjudication process to take place. We all know that the tribunals are not formed in GST. The second impact is that the mechanism of removing red flag is not provided in the amendments. Third aspect, If, let us say, the recipient has not taken input tax credit because it is restricted, what is the mechanism for the recipient to re-avail the input tax credit? Although section 41 is brought wherein it has been mentioned that if the default of supplier is later corrected, the recipient can re-avail the input tax credit, but how this is going to be communicated is not been brought out. We need to wait for the rules to understand what is the mechanism of communication and re-availment going to be there. My biggest problem is that if this default correction is going to happen by the supplier after the due date, then whether the recipient can re-avail the input tax credit or whether the time limit restriction would be there for the recipient. For example, let us say the supplier has been defaulted in March 2022 and he has corrected the anomaly and he has got the red flag removed by December 2022. By then, the time limit to take credit for recipient is already over. So in that case, we need to interpret section 41 in a harmonious manner that the time limit would not be available for re-availing. The time limit would only be there for availing the credit. But this is something not clear and we need government to clarify on this aspect. Currently, there is no mechanism available to communicate the details of payment of tax by the supplier by DRC 03. Many times, suppliers make the payment of tax through DRC 03 for any scrutiny of returns, investigations, ASMT 10, audits, or annual returns. There is no mechanism provided of how these details are going to be communicated to the recipient and how a recipient can take input tax credit based on these details. Although the details are there as to restriction of credit, but after making the payment of taxes, the mechanism of communication in these cases is not been provided in the proposed amendments. Very important. You are putting a restriction saying that if GSTR 1 and GSTR 3B, there is a difference between the for the supplier, then the recipient's ITC would be restricted. But then, very unfortunate that today there is no mechanism to rectify GSTR 3B. Let us say if somebody has wrongly updated the details in GSTR 3B and which is causing a difference between 1 and 3B, please allow the mechanism to rectify GSTR 3B. Law is, although there is a provision in the Act to allow rectification of errors or omission in GSTR 3B, but unfortunately, the portal is totally not giving this system of rectifying GSTR 3B. In fact, in GSTR 1 also, if there are any omissions, there is no mechanism even today to rectify those omissions. So if there is a difference in GSTR 1 and GSTR 3B, that difference is going to be there forever. There is no mechanism provided to rectify these differences. Next very important aspect, mechanism of payment of tax by the supplier is also not available. In the context of GSTR 3B, it is impossible for a recipient to know whether the supplier has made the payment of tax on his invoice or on his transaction because the details are not at all going in the software in that manner. So even the fact that the supplier has made the payment of tax, recipient would not be aware. And the last and the most important point, which is still not addressed, while you block the supplier, while you red flag a supplier, there is no mechanism provided of giving an opportunity of being heard, which is a principle of natural justice. In my view, you cannot red flag or restrict a supplier to pass on the input tax credit without giving him an opportunity of being heard. So not having this provision of opportunity of being heard itself is a threat to justice in this case. As we have seen in part 1 and part 2 that there has been a restriction brought out on eligibility of input tax credit and restrictions being placed even despite the credit being visible in GSTR 2B. Now we need to understand what is the legal validity of these amendments and eventually what is the action plan that businesses would have to take practically in order to claim the amendment, in order to claim the input tax credits. First and foremost, is that, in my view, this would be legally non-tenable on the very ground that this is an excessive delegation of power to the executives. Because when Section 38 says that any other such class of persons which would be notified or as may be prescribed, which the power has been given to the executives to put up restrictions without routing the matter to GST Council, and such restrictions that are going to have a large scale impact on the businesses. In my view, it is an excessive delegation, and on this ground alone, it would be held to be invalid, incorrect, and not legal. Second very important aspect which government is missing out in this one-way matching concept is that in the one-way matching concept, there is a clear case of double collection of taxes. Because if the government is going to restrict the input tax credit of the recipient, then government has already collected 18% GST on that transaction. But do you think that the government is not going to collect the tax on this transaction from the supplier? Government is definitely going to collect the tax even from the supplier by way of audit, investigation, scrutiny, and various other machinery powers which the government has got. But unfortunately, the mechanism of communication in that case is not there, and eventually, on the same transaction of 100 rupees, there is a 36% of GST collection, 18% from the customer by restricting input tax credit, and 18% from the supplier by uh, collecting the input the taxes later on separately. So in my view, this is clearly a case of undue profiteering out of a transaction, which would not be tenable, and uh, there is already a Madras High Court judgment on this case that you better go and ask a supplier rather than taking from the recipient. But here, squeezing the taxes from both is not correct, and this is why second reason I say that this entire amendment is invalid and incorrect. Very important another aspect we need to understand from a legal standpoint, that how can an input tax credit become ineligible or unavailable without it first becoming eligible. For example, let us say that a supplier uploads the details after November 30 of the next financial year, or the restriction that is placed that becomes free after November 30 of the next financial year. Now the recipient is having a time limit to take the credit only up to November 30 of the next financial year. Now if this restriction is going to be sorry, now if this restriction is going to be uh, there at an invoice level, then it means that before even a recipient becomes eligible to take credit, it becomes unavailable, because by the time the restriction is removed, the time limit to take credit is over. So this is another reason why I see that this entire provision which is brought is not legally correct. Very important that the onus is on department to devise a proper communication mechanism. If government is clear that they want to make sure that all the restrictions are going to be put at the recipient's end, then government must do two things. First is they must also make it clear that they are not going to collect the taxes from the supplier, point number one. Or they must bring a system that whenever they are going to collect the tax from the supplier, it would be notified to the recipient, and the recipient would be eligible to take input tax credit even after 2 years, 3 years, 4 years, whenever the supplier is later making the payment of the tax. So this communication mechanism has to be devised. As of today, it is not in place. Most importantly, how a recipient would come to know that when the supplier has made the payment of tax. Today, it is not possible because there's no system. It is possible only in two-way matching concept. So it is expecting a recipient to do something impossible. How can a recipient go and ask a supplier to tell me out of the 100 invoices whether you have paid taxes on my invoices? You please tell me, give me on the letterhead. No supplier is going to entertain all these things. So it is like there's a legal maxim, lex non cogit ad impossibilia, which means that you cannot expect a person to do something that is impossible. So this is exactly what government wants an assessee to do in this amendment. Few other articles of Constitution of India, in my view, are totally breached. Are Article 19(1)(g) of the Constitution of India, uh, Article 300A of the Constitution of India, and Article 265 of the Constitution of India. In my view, this is a clear case of collecting taxes without the authority of law. There is no authority in the law to collect 36% tax on a 100 rupees transaction. Most importantly, it defeats this very statement and objects which was mentioned while introducing GST 122nd constitutional bill for GST, for bringing GST Act, which says that there would be a seamless flow of credit. There would not be any cascading of taxes. But very unfortunate that this amendments does not seem to give a seamless flow of credit, and purely it is now a mindset that restricting credit is a wonderful way to increase revenue. So in my view, based on these submissions, these entire amendments are going to be held to be invalid, illegal, unconstitutional. We need to wait and watch to understand them in more detail. So in the last part of the session, we would be looking at what are the possible actions that businesses must take to deal with this kind of situation. First and foremost is that everybody would now have to poke into others' GST compliance more than themselves. Already we have started doing it, but now it has to be more vigorously done, because a recipient's credit is going to be blocked for any non-compliance of supplier, not just the non-compliance in payment of tax, non-compliance in difference in 1 and 3B, non-compliance in supplier with his supplier, all these things. So eventually we would have to uh, we would have to be more proactive here. uh, uh, Vendor onboarding process, periodic vendor screening process. The reports of vendor non-compliances has to periodically go to top management. There must be a very good coordination between the top management, taxation department, accounts payable department in this regard. This is one action that needs to be taken by the businesses. Second very important aspect is that software must now be embraced. Technology must be embraced. We must use technology to do a match, mismatch, and all these things to enable claiming input tax credit. But while I say this, it is also very important that complete reliance on technology is also not correct. We have seen that while software gives 90% of matching, to really squeeze into that balance 5-6% of matching, you need to put manual efforts. We need to understand that technology ultimately works on logics, and the certain analytics which a human mind can do cannot be done by technology. So while you embrace technology, you also add and patch up a manual correction mechanism. There must be a maker checker control on the 2A to B matching system with the invoices, because if there is only one person doing it, I'm sure there are problems that would be there in the matching concept. So this is very important aspect. Now practically, four different things that the businesses can look at doing. Point number one is nothing doing, take the input tax credit as per books and challenge the constitutional wires of section 16 subsection 2 subclause AA subclause BA, wherein the assessee is going to contest the matter right up to the High Court or Supreme Court, as the case may be, and take the input tax credit as per the books of accounts. Although this is a litigated view, generally we don't advise anything that's disputed or litigated. But then we need to understand that if the stakes are high, at times there would not be a choice but to contest and fight for the rights. This is action number one. Second action that the businesses can look at taking is avail the credit and don't utilize. And this is exactly what we used to do in central excise regime, service tax regime as well. So if you feel that any input tax credit is not matched, it is mismatched, it is not available in GSTR 2B, it is restricted, you still avail the input tax credit, but you don't utilize that input tax credit. Park it in your electronic credit ledger. After a few years, we will have a clarity, we will have High Court judgment, we'll have judgments from Supreme Court. At that point of time, you utilize this entire input tax credit so that you're not losing the input tax credit in the process. Very important aspect that can be looked at. Third action that can be considered is to avail the credit as per the books, reverse it under protest. Show the details of reversal very clearly in your GSTR 3B returns, and then as soon as you are going to the credit is available and the default is corrected by the supplier, you re-avail the input tax credit. A question may come, what if by the time the credit is to be re-availed, the time limit is already over, whether we can still re-avail the credit? In my view, as per the amended section 41, the time limit restriction would not be applicable for re-availing the input tax credit, which means you can avail the credit within the time limit. Reverse, because it is not uploaded by the supplier or if it is a restricted credit. For re-availing the credit, there is no time limit. Even after 2 years, 3 years, 4 years, you can re-avail the input tax credit. This is one of the good ways in still restoring the input tax credit and not taking that as a cost. Fourth aspect, which largely the businesses fourth aspect, which largely the businesses are going to do, is to take credit only to the extent of what is freely available and not restricted in GST or 2B, and debit the supplier for the balance. So if there is any credit which is not available in 2B, the supplier would be debited. So this is going to create a huge amount of litigation between a supplier and the recipient. There will be huge writ petitions and litigations that is going to happen in the civil courts on GST matters, rather than in the GST tribunals and courts. So these are the four action points which the businesses can look at to eventually deal with these restrictions that are brought. While I say this, I am of a considered view that the restrictions that are brought are not correct, and we would be having few more amendments coming in the times to come, maybe in the next budget and after that, when the government would realize that one-way matching is not the right approach. One-way matching leads to double collection of taxes. It's like keeping both the people in dark. So eventually, the country either needs two-way matching or some other mechanism of matching concept that is required, which is still foolproof, and there is a proper flow of communication. In a one-way matching also, if government wants to introduce a one-way matching, then only important aspects which governments needs to look at is not to have any time limit to take the credits in that case. Point number one, and point number two, the mechanism of communication must be free flow mechanism. There must be opportunity to rectify. There must be opportunity to uh, give the details of taxes paid at any point of time, even after 2 years or 3 years or 4 years, whenever the supplier is making the payment of tax. Only in that case, the one-way matching could possibly be a success. So with this, I would like to conclude my video or discussion on the topic of ITC that has been restricted by way of section 16, subsection 2, subclause BA, read with section 38. I thank you all for patient listening.